Hi, this is Zach with the US Chartbreakers here at Zach's Traders Cafe for Thursday, the 18th of April. Starting off with the S&P, which is certainly not up to looking as good as it did earlier in the year. We've got the market falling out of that rising trend channel. That's been there since back in October. The floor of the channel there normally around 50.60, and below that we've got the chance of filling the February gap down to 49.83. May be the first realistic or sensible entry point in terms of catching the current falling knife. Moving on to the Nasdaq, and here the situation obviously not quite as fluid as the S&P, but still the same kind of picture, breaking out of that falling rising October trend channel rather. Next support level down around 17,300, and that was the February support. Obviously, there's a risk here of this market basically giving away all the 2024 gains, but that would have to take it down to around 16,300. Not actually as far away perhaps as it may appear at the moment. If you're a bull, you're probably looking for an end of day close at least back within that rising trend channel to 17,600. Moving on to the stocks, and not that many to find. Took a while to find the selection today. AGL Energy is the first one, and here see a rising trend channel base from back in December, top of the channel there at $11, and we're looking for that by the end of next month or even sooner, especially given the way that we've gapped up through the 50-day line and then bounced off a rising 50-day line. So that does give the impression that while we're on the right side of $9, $11 should be relatively easy to achieve. On to a stock which we looked at a while back, Cutera, and here, although it may not look like much, it does look as though we are basing. We've been basing basically here since back in November. The start of this week gave us a hit of the 50-day moving average, and it looks as though we're forming a bull flag, a continuation signal, continuation pattern around the $2.10 level. Above that, looking for up to $3.70 by the end of next month or even sooner. Obviously, that would just retest the initial resistance of the year. Quite a frequent flyer coming up next, and it's Dogness, and here you can see that we've got this rising trend channel, the black channel there from back in October, top of that channel there at $10.50. Hoping for that by the end of this month while we remain above the 50-day moving average around $6.40. If we do break through the $10 area in a decent way, then the next level up would be $16, the upper parallel of that rising trend channel from October, but obviously early days yet in terms of that particular target. Moving on to Dawson, which we've looked at before here, and here we've got a pattern which hopefully will reap a reward. We've got the situation where we gap through the 50-day moving average, now rising back at the beginning of this month, and we've also broken through neckline resistance from back in November around $1.90. The longer we stay above $1.90, the greater the chance of a move to the top of that May broadening triangle, rather, as high as $3 by the end of next month. The current situation at the following stock also looking interesting. Lipocine, here we've got a rising trend channel base from June. It's obviously taken quite a long time here, but recent support at and above the rising 50-day line suggests continuity on the upside, $8 perhaps by the end of next month, while we remain above that 50-day line around $4.40. And obviously that's very close to the floor of that rising trend channel, the uptrend line there from back in December. Next up is Marpai, and here another rising trend channel base bouncing off ricocheting off the 50-day line. That's currently around the $1.90 level, and above that we're looking for a breakout of recent resistance at $3 and hopefully up to $5 at the top of that rising trend channel from back in July by the end of next month. So obviously that would take the shares back to where they were basically this time last year. Next on the list is Rani, and here the picture, one of the best, the most sort of high-flying stocks of the selection. The rising trend channel, steep one there from back in November. Top of the channel there heading towards $11. Might even hit that by the end of this month, while we have no end-of-day close back below the floor of the latest gap at around the $6.80 level. So above $6.80, looking for the the top of that channel near to $11. We looked at the next stock a while back as well, and it seems to be coming good, Shattuck Labs. And here the reason for the excitement is this very strong consolidation after the unfilled gap to the upside. And we have that back at the beginning of December rather. Rising trend channel here, and the idea here is that the longer we stay above the floor of that channel there around $9, the sooner we could head to the top of the channel there at $14, hoping for that by the end of next month or even sooner, but also hoping for quite an explosive break of this recent consolidation between $8 and $10. That would also automatically imply a minimum $2 move to the upside. United Airlines may be an unlikely candidate for the chart breakers, but here we are with the handbrake turn that we had, a sort of a bear trap from a rebound, bear trap gap reversal from below the 50-day moving average at $43. We also see that there was a gap down from the April peak, so that means we've got a bear trap island reversal, which tends to be one of the strongest signals around, and that suggests that not only will we hit and break the top of that rising trend channel from October at $49, but also head up to as high as $56 on any end of day close above $49, $56 on tap perhaps for the end of next month. But the key here, I think, is staying above that 50-day line. Moving on to a rather more obscure situation, which comes in the form of the stock I'm just trying to tap out at the moment, Vanda Pharmaceuticals. You can see that we've also had quite a turnaround here, so bear trap gap reversal from below the 50-day moving average. Initial target here up to $6.20 at the top of that rising trend channel base from back in August. If you're a fan of the shares and think that that's a done deal, then up to $7.30 maybe by the end of next month, the longer we stay above the $6 level. But in the meantime, don't really want to see the shares back below the old August to March resistance around the $4.80 mark. So end of day close back below $4.80 might be a negative signal. Wisa is next, and here we can have, we can see if we zoom in on it, we'll see that there is a broadening triangle base, and that has basically come into play with the latest break of the 50-day moving average. 50-day line currently around the $5.60 level. Above that, looking for $20 perhaps by the end of next month at the top of that broadening triangle. But obviously big movements here, so this is not for the faint-hearted. Ideally, there's no end of day close back below the February-March resistance around $8.50. Finishing off with a stock which hopefully will be one of the more bullish situations going forward. We've got Zuora, rising trend channel base here from back in August, and rather messy price action, but we're hoping that the latest break of the 50-day line at $8.70 is the definitive one. We've already had a spike through post-December resistance around $8.60, and end of day close above $8.60. Hopefully we can get up to the top of that rising trend channel from back in the August period at $11.30. That's it for me today. More updates tomorrow.